This is the Bloomberg Surveillance Podcast. I'm Tom Keene, along with Jonathan Ferro and Lisa Abramowicz. Join us each day for insight from the best in economics, geopolitics, finance, and investment. Subscribe to Bloomberg Surveillance on Demand on Apple, Spotify, and anywhere you get your podcasts, and always on Bloomberg.com, the Bloomberg Terminal, and the Bloomberg Business app. For the entire half hour, Nouriel Roubini. Damien, I'm going to tell this story as quickly as I can. You brought it up earlier, which is the idea of where Dr. Roubini was in 2005. One night at Davos, at the Belvedere Hotel, I sat in the old bar, not before they fancyized it. It was the old wooden bar with dust and, Veldera. And Dr. Roubini and I sat there by ourselves, and just around the corner of the bar was a guy named Geithner. And Geithner just listened. He didn't participate in the conversation. And Nouriel and I went through the excesses of 2005, 2006. And within that, folks, and forget about interviews and speeches and all that, over a quiet beverage of our choice, he laid out the next 72 months like nobody I've ever seen.
That's right.
It was such a privilege to have Mike Bloomberg pick up the bar tab as I met with Nouriel Roubini in 2005 or 6. Why don't you bring in the esteemed Roubini?
Dr. Roubini, you probably don't remember this, but in 2007, when I was at Citigroup, I was working for Mark Bohr and Chris Pace. Shout out to you two. We had some traders in from Tudor, from Soros, and we were at Mr. Chow's downtown in Tribeca, and you were talking about this. Now, fast forward, this is not 2005, this is 2007. You're talking about the global financial crisis, your call, and these traders were all over you saying, you've been calling for this forever, whatever. So talk to us now. Talk to us about where we are now in the economy. Where's growth expectations now with disinflationary pressures kind of bubbling up here? Where are we in the cycle?
Where we are in the cycle depends on whether you're in the United States, in Europe, in Japan, or China. Probably you cannot generalize it, but I would say if we start with the US, it's been an interesting evolution because about a year ago, most economists thought that we'll have a hard landing. Then people said there'll be a bumpy or softish landing with a short and shallow recession. Now the baseline became one of a soft landing, but the economic data on growth have a surprise on the upside. And I would say that paradoxically, the biggest risk today to the market is a case of no landing, where growth could continue to be above potential. And why is it going to be negative for the markets? Because if growth remains above potential, the Fed is not going to cut rates starting middle of the year. It's not going to cut rates 3 times this year. They could cut only 2, 1, maybe even 0. And I would say paradoxically, the best news for the economy may be the worst news for the market. So we've gone from hard landing to bumpy to soft to maybe no landing.
For our audience, let's just be clear here. This is Professor Nouriel Roubini talking, actually bullish on growth expectations on the U.S. economy, on U.S. exceptionalism. Yeah. Let's talk about some of those other elements.
I'm optimistic about growth, but paradoxically, that optimism about growth implies inflation more sticky and bad news for the market, at least on a cyclical basis.
So you were just going to take me there, right?
Yeah.
I mean, 75 bips priced in now through year end here in the U.S. I mean, has the market got it right? Or, should we expect perhaps the risk in the pain trade to markets being that the markets are pricing in still a bit too much?
Yeah, the markets have been always too dovish. Last year, as you remember, they were expecting that the Fed would cut rates or even in the second half of the year. The Fed said no, and the markets were pushing the Fed, and then the economic data remained strong. And actually, you got a correction, 10% in August and September. Then this year, they started the year saying 6 rate cuts. The Fed told us 3. Now they moved to 3 rate cuts like the Fed does. But as I said, the possibility is that if economy remains stronger, January data on inflation were strong, that then the Fed doesn't cut in June, doesn't cut in July or later, and doesn't cut 3 times this year. Could be less than 3 times, and that could be the negative surprise for the markets.
I'm going to go to some of the gloom that's out there, and that is a buildup in our fiscal position. You advised Bill Clinton in another time where we measured billions. We now measure, Dr. Roubini, in trillions. We have American exceptionalism. We have our technology. I've got the IMF with a growth view out 3 years that looks Roubini-like, to be honest. But the elephant in the room is the debt buildup in America. Maya McGinnis, among others, expert on this. Do you study the debt and say it will upset the apple cart, or can the debt be tolerated by American productivity and growth?
Well, the first two chapters of my new mega threats are about debt and debt crisis. Actually, the first chapter is called The Mother of All Debt Crisis, and I point out that not just in the US, but also globally, there's been a rise in private and public debt as a share of GDP. In the US, the sum of the two is 420% of GDP. And while the average debt ratio for the public sector is 100% of GDP in advanced economy, that's the official debt. On top of it, there are implicit liability coming from aging of population and social security pay-as-you-go systems or healthcare system also pay-as-you-go. So that implicit debt is another 100% of GDP. Now, the paradox for the US is the following one. If you're another country, Greece, Italy, even UK, and you are fiscally deviant, you have right away market punishing you. Your spreads go higher. If you have exchange rates that are flexible.
Why don't we face that discipline?
We don't face it because you have the exorbitant privilege of being the largest reserve currency in the world. And that paradoxically means that we can borrow longer and cheaper to finance our fiscal and external deficit. But that means that eventually the market is giving us enough rope to hang ourselves even longer.
Okay, I want to.
And eventually, once the shock occurs, it'll be in trouble.
We're going to finish with a thought with Dr. Roubini and then come back. Damien's got a loaded effort on China here in the next hour. Dr. Roubini, you just talk about exorbitant privilege, which is Giscard d'Estaing of old word France. It's Barry Eichengreen out at Berkeley, and critically, it's a laureate Stiglitz, where there's an implied assumption our growth rate will stay ahead of our real rate, however you want to measure it, that the growthiness will be there. Do you suggest our American growthiness will still be there?
It's a mixed bag because on one side, I think that technology, AI, innovation could increase potential growth. But in my book, Mega Threats, I talk about 10 medium, long-term negative aggregate supply shocks that can reduce growth and increase inflation. They are stagflationary. And whether technology is going to dominate, probably over the medium and long term, yes. But for the next decade, I think these mega threats, whether it's global rivalries, deglobalization, climate change, pandemics, high private and public debts, the return of inflation, those are all risks to economic growth.
Nouriel Roubini, quote, "The Looney Tunes Roadrunner could sniff out dynamics in gift wrapping. Why can't we?" Nouriel Roubini there, starting mega threat strong with the Looney Tune as well. What about the Roadrunner in China? With these two meetings coming up, Damien Sassower, you wonder what our intelligence is, our knowledge of present and future China.
Well, I mean, Tom, you like to reference dollar yuan, which is trading 721 on the offshore. But what I like to look at in China is the 10-year yield. The 10-year yield is at 2.35%. It's one of the lowest yielders in the world.
That's
in the world. And so, Nouriel, I want to ask you about that. I mean, talk to us about Chinese deflation. What does that mean for somebody sitting here in New York City, or more importantly, somebody sitting, elsewhere in this country, because New York's very unimportant at this point in time. Talk to us a little bit about what it means for your average everyday American, deflation coming out of China.
Well, it means a few things. There's deflation in China because there is excess supply of goods, services, real estate compared to demand. And the implication for both Chinese inflation and global inflation are deflationary through three channels. Channel number one is that China is going to, unquote, dump this excess capacity of goods in global markets, and that puts a downward pressure on global prices. Secondly, the Chinese currency is weakening, means the dollar and other currencies are strengthening. You import less inflation from China. And three, Chinese growth is 2-3%, effectively implies less demand for commodities that put downward pressure on commodity prices. So weakness of Chinese growth is disinflationary, not just for China, but is also disinflationary for the global economy. Now, you could say it's good news, but the bad news is that this excess capacity is being, unquote, dumped in global market. There is already protectionist pressures, and these protectionist pressures are going to become more severe because the last thing that the US, Europe are going to be accepting is Chinese exporting their excess capacity by ever widening trade deficits with these countries.
Well, Dr. Roubini, I mean, take me through this. I mean, is disinflation enough? I mean, you've pretty much said it. I mean, is disinflation enough to move Chair Powell's hand, to move the Fed's hand here in the U.S. and get them to start cutting rates, say, by the middle of the year, which is what markets are sort of projecting right now?
Well, the channels through China don't have a huge impact yet because we're not importing as much. I think what matters for the U.S. is going to be headline inflation. And as I pointed out, if we're going to be in a no landing scenario as opposed to a soft landing, growth is going to remain above potential. Inflation is going to remain sticky, and the January number confirmed that. And that means that the Fed may not cut rates even in June and may not cut rates 3 times this year. And if that happens, actually, the stock market is going to correct.
Stiglitz said
that's the biggest risk to the market, actually. No landing.
We had globalization with a few people discontented. I would suggest many more are discontented, including the leadership in Beijing. What's the next globalization look like for you?
Well, I think we're in a process of gradually less globalization. We went to hyper-globalization now. Even if we don't have real deglobalization, we're going to have friendshoring, we'll have reshoring. We'll talk more about fair trade and secure trade rather than free trade. We'll have some fragmentation of the global economy. We'll have just-in-case rather than just-in-time global supply chains. We'll have reshoring and friendshoring rather than offshoring. We'll have emphasis on economic security rather than efficiency. So it's a process, call it of de-risking or decoupling, but it's ongoing. It's going to continue over time.
Just because of the huge response out, particularly on YouTube live chat, Roubini right now on the dash of Bitcoin, the idea of it's in ETFs, we can put it in our retirement accounts. I believe it's a limited, scarce resource. Obviously, the price is going up. What's the quality of the price increase in Bitcoin right now, the nature of it?
Listen, Bitcoin used to be 10,000, went to a peak of 69,000 late in 2021, then fell to 15,000, now is above 60,000. It's so volatile, it can go higher, it can go lower. And by the way, not just Bitcoin, but the entire crypto space, they call them cryptocurrencies. But anybody who knows anything about currencies, money, monetary policy knows these are not currencies. For something to be a currency, it has to be a unit of account. Nothing is priced in Bitcoin. It has to be a scalable means of payment. You can do only 6 transactions per second with Bitcoin. You can do 50,000 with the Visa network. It has to be a stable store of value. Can go up by 10% one day, can go down 20% another day. And it has to be a single numerator so we can compare prices of different goods and services. It's not a unit of account, it's not a scalable means of payment, it's not a stable store of value, it's not a single numerator. So whatever they are, you cannot call them currencies. They are not currencies.
No, I agree with that.
So that's a fact. And even the supporters of Bitcoin don't anymore believe it is going to become a means of payment. Nobody's using it as a means of payment, nowhere around the world. Even El Salvador, where Bitcoin was made legal tender, the amount of transactions on goods and services that are using Bitcoin is less than 1%. This is a legal tender. People are not going to use it for transactions, period.
Yeah, no, I mean, Dr. Roubini, you said El Salvador. You're taking me exactly where I want to go. I want to talk about the geopolitical risk premium that is or is not embedded in markets, specifically as it relates to these elections we're seeing, right? I mean, we've seen quite a few elections already year to date, and we're going to see some big ones coming through. I'm thinking India, I'm thinking South Africa. I mean, talk to us a little bit about election risk in the market. Should investors be concerned about that?
Well, there are tons of elections, even in important countries, but let's say in India, Modi is going to get reelected. The only issue is by which margin. And I think that the global impact even of stuff happening in South Africa is going to be minimal. The ANC might have less power or more power. We don't know. The only election that matters for the global economy and markets is the U.S. election. And it matters not just because of geopolitics, of what are going to be the foreign policy of Trump relative to Biden on China, on Russia, Ukraine, on Europe, on the Middle East. But most importantly is his economic policy. He has said, I'm going to impose a 10% tariff on all imports coming to the U.S., when the average tariff is 2%. He said, I'm going to impose tariffs on China of up to 60%. And he said, well, I'm going to also renew the tax cuts that I passed. It's another $1.5 trillion deficit over the next decade when the deficits are out of control. So I think the fiscal risk and the trade protection risk could really derail the market and slow down economic growth and increase inflation. That's the biggest risk coming from Trump.
I got 42 seconds. What was a book when you were a kid that got you going in economics and international finance? What was the book that changed Nouriel Roubini when you were a kid?
Well, there was a book by Jeffrey Sachs that was on the stagflation of the 1970s, where we had the oil shock of 73 and 79. It was the first book that spoke about the term stagflation, and was the period of time exactly where you had lower growth, recession and inflation, and now we're facing 50 years later similar stagflationary pressure.
I'm
So
going
it was
to
really
put that book out on Twitter and LinkedIn, and I've got another Jeff Sachs book where he was way out front on the dumbing down of America. Nouriel Roubini, thank you. It's been way too long. Now that you're Professor Emeritus, he's holding court. He's over at the St. Regis breakfast or the Regency Hotel breakfast. He's very emeritus. This is a really hallmark to get us started on the week, and it is Jim Bianco of Chicago with Bianco Research, who has a research note that the entire street hangs on, and they do because he synthesizes together our economics, our finance, our investment, and indeed pulls in some international relations as well. Jim, you talked about resilient rates. It was an arch call 6 months, 9 months ago or so. I would suggest we've gotten a Bianco market where there's disinflationary tendencies and then rates don't come down. How do you recalibrate that into the second quarter of 2024?
I think it's going to be recalibrated by people's changing their expectations about the Fed. You know, the old line on Wall Street was the Fed hikes until something breaks. And the assumption 6 or 9 months ago was all the hiking and those high interest rates obviously broke something, right? Well, turns out maybe it didn't. We thought for a moment a year ago it was the banking system, but it survived that as well. So now we're starting to see everybody push off those rate cuts into the future. March is now priced out as a rate cut meeting. May is priced out as a rate cut meeting. June is still a rate cut meeting, but that's the 4 months away or 3 months away. Excuse me. There's a lot of data that could come, and the data recently has been very strong. So the recalibration, I think, is going to be, as I like to jokingly say, the rate cuts are going to always be 60 or to 90 days away, and in 60 to 90 days, they're going to be 60 to 90 days away.
Jim, I'm wondering, back when the market was pricing in something on the order of 150 basis points of cuts only a few months back, do you think that the market was pricing in the risk that something would break? And in your opinion, have we gotten past that? I mean, should we not be concerned about, reserve repo facilities, the plumbing, the TGA, and the U.S. Treasury market? I mean, if something were to break, where do you think that might happen here in the U.S.?
Yeah, no, I think that the market was pricing in this idea back in January when we had 6 rate cuts, that the rate hikes had broken something, that we were going to have a soft landing, inflation was going to go down to 2%, or maybe we were even going to have a recession. And now the reality is that isn't happening. Sure, we should be always concerned that there is going to be a problem in the plumbing of the financial system or some geopolitical event or something else that's unforeseen. But that's not how this Fed works. They work on data dependency. Show me data that shows that things have turned south. Don't give me a narrative that there's a problem out there. And the show me data is not there right now. It's actually pretty strong. And the inflation rate in the inflation data, I've been arguing, might be bottoming right now somewhere in the high 2s to low 3s on a year-over-year basis on most of the headline numbers.
And that's the second time we've heard that this morning.
Yeah.
I mean, this is, people are catching up with Bianco.
Yeah, the no landing scenario, right? I mean, look, that's really where my question for you, Jim, is where are we in the interest rate cycle here? We've seen this backup here in U.S. Treasury deals. That's largely driven by real rates, by growth expectations. What are your thoughts on growth as we look ahead into the end of, really into March?
Well, if potential growth is 2.5%, we've had 6 quarters in a row now where we've been at potential or above it. There has been no soft landing. There has been no recession. And it looks like the first quarter is tracking to be at potential or potentially above it too for a 7th quarter. And I think that that's going to continue, as I like to jokingly say, unless I wake up someday and my Bloomberg is full of red headlines and everybody's hyperventilating, well, then I'll change my forecast if that happens. But short of that, we're going to continue with this no landing, and we're going to continue with what looks like bottoming inflation, and slowly we're going to drag more and more people into this camp.
In the original medical moment we were in, and I think we don't know where we were in the pandemic, coming out of it, I got too many people, Jim Bianco, telling me the pandemic's over, and I just don't buy it. I look at the stimulus that was derived from multiple stimuli, and also I look at the debt buildup of the federal government. Are we getting a nominal GDP group that makes everybody feel good simply because we've had a debt overlay over 72 months?
Yeah, I think so. I mean, if you really want to boil it down, there's two main drivers of higher nominal GDP. The first one is big government spending or the deficit. The government is just spending so much money right now. It's almost going to be hard to have a recession. And the second one is the savings rate ran at around 6% pre-pandemic. That means that for every dollar somebody made, they spent 94 cents of it. Today, the savings rate is running at 4%. For every dollar they make, they spend 96% of it. That increased consumption is what's been pushing the economy too, and has been providing support for the inflation story. People are spending more money on things, and this is after inflation. So it's more units of things they're buying. It's not just that the prices are higher. That is going to keep the economy strong until those two dynamics change. Either the government spends less money, and they're not going to unless there's a crisis that forces them, or people's propensity to spend slows down. And I just don't see that happening right now.
I mean, the nominal GDP, what's your GDP run rate, given your idea that rates will stay higher, will be resilient? What is your real GDP and nominal GDP call forward?
Yeah, it's on my headstone right now because I've got 3% on inflation, 2.5% on nominal GDP.
Yeah.
So
Yeah, 2.5.
2.5% on growth, real growth, 3% on inflation, 5.5% on nominal GDP. And ultimately, I think that that's where interest rates are going to go, is to 5.5%. And that's what's on my headstone, that everybody's freaking out that the rates could go that high. I think they can, and they won't break anything if they get that high. That's the part that everybody seems to miss about that call.
It's fascinating. And folks, I can't say enough about a 5% plus nominal GDP. It just solves a lot of problems for corporations. It's just like the beautiful, wonderful thing.
I can't believe we're talking about a 5% nominal GDP.
I cannot either.
US.
And Jim Bianco,
that's China-esque.
Jim Bianco, way out in front of this. Bianco research there from spring training for the White Sox and the Cubs. Mick Mulroy joins us right now. He's former U.S. Deputy Assistant Secretary of Defense. Damien's going to dive here into Gaza and Ukraine and the rest. Mick, I want to talk to you about your philanthropy, which is something that is hugely germane, and that is child soldiers. How pervasive is it that we have incredibly young people in various nations' military?
Also, good to be with you guys, and I really appreciate you bringing that up. So it is one of those stories of conflicts that doesn't get told enough, because it is not only pervasive, but it's increasing rapidly, because what we see is essentially these wars start, generally speaking, adults fight them, sometimes not. But over time, there is a lot of kids on the battlefield, and they are expendable, quite frankly. These wars happen in countries where not a lot of people pay attention to, and the people that actually populate these militias in these armies are from the places where people in the country don't pay much attention to. So this is a really bad problem. In 2019 alone, it doubled in the Middle East. So Syria and Yemen are big examples. And it is just one of those things that, quite frankly, if adults want to start the wars, they should be the ones fighting and dying in it, and not some 12-year-old kid that was forced to do that.
Well, Mick, the American war machine appears to be in a state of disrepair, right? And time is running short. I'm curious to hear your thoughts on that. What must the U.S. do in order to right the ship there and, get funding to, places like Ukraine and Israel?
So it's absolutely essential, and it isn't charity. You hear people say that, like, "Oh, we're just giving this money away." This is in our own national security interest. Yes, it is the right thing to do. When a partner is in harm's way, you support them. But it's not just for that. The United States' relative strength is compared to our adversaries. So Ukraine, for example, has caused up to 300,000 casualties of the Russian military. I mean, just think about how much that actually is. And they've depleted the Russian military force by over 50%. So they are basically fighting one of our most significant adversary, and probably our most dangerous and unpredictable one. So by doing this, our forces, our troops don't need to be on the ground and fighting them. Should they go past Ukraine, which of course the next stop is a NATO country in Poland. So this is something that is completely within the US's national security interest to do, and we need to do it now, because essentially there's parts of the battle space right now where the Ukrainians are running out of ammunition, and that can't happen. Obviously, they have all the fighting will in the world. We've seen that. They've proved that. But if they don't have the means, then they won't be able to fight long.
Mick, Israel has really lost control of the narrative in the Middle East. I'm curious to hear your thoughts on what they can do, at least from a PR perspective, to right the ship with players such as Turkey, Brazil, the United Nations itself, the rest of the Middle East. What are your thoughts on what Israel's doing today and what it could be doing differently?
So I do think, obviously their strategic objective of the military destruction, or at least the degradation of Hamas, makes sense to anybody that I think is fair-minded. They can't have that kind of attack and that kind of element that they saw on October 7th and that we see in Hamas, which, by the way, claims to care about the Palestinian people, but they obviously do not. They hide amongst them. They try to keep aid from them. They try to actually create, in my opinion, a worse situation than it already is for their own political aims. But what can Israel do? I think the first thing they can do is to increase the flow of humanitarian aid into Gaza. We are at a starvation level, especially in the north, where there's around 300,000 people that are living in the rubble, that are have gone to eating animal feed, grass, flour mixed with salt water. It is a crisis level, and that is something I think they could do right now. I don't know if they'll get credit for it. They should if they do, but that is something that needs to happen.
Mick, what's so important here, and whether we're talking to General Kimmett, General Hodges, or you, it's the idea that, okay, we have a Pentagon that we can deploy, but in the case of Ukraine, we've got to deploy it within a mix of allies with different opinions, including our own, particularly with an isolationist America. And then with Gaza, we've got to deploy it into an ally that really doesn't want us to deploy it. What do we do with Mr. Netanyahu and domestic political Israel as we're dropping parachutes and boxes on the shores of the Eastern Mediterranean?
Right. And I think everybody would recognize that that is largely symbolic. It was about a truck and a half worth of material that was dropped in those airdrops. Obviously, for the people who received it, it was good, but that's not even going to come close to meeting the demand. So we have to go beyond that. I think there's obviously a tension between the current administration in Israel and ours. And I think that's something that's going to make it even more difficult when it comes to how we work together to both allow Israel to defeat Hamas, but also put it on a track so this doesn't continuously happen. And I think most would say that would be toward a two-state solution, but one in which the Israelis have a partner in a revitalized Palestinian Authority, and obviously not one in which Hamas is in charge of any kind of future Palestinian state. But I do think that tension is we're seeing it right now. We see Benny Gantz in the United States, somebody who's very well known to American policymakers. He was the defense attaché for Israel in Washington, and that is a very significant role. It usually leads right into being the chief of staff of the Israeli Defense Forces. So he is well known, and he is somebody I think that that both sides of the aisle feel like they can work with very closely. But reportedly, that really enraged Prime Minister Netanyahu. So obviously the Israelis have to decide who's going to be their leader, but that is a tension that I think will exist until there's a switch at the top.
Mick Mulroy, thank you so much. Greatly appreciated today there on our international relations.
Now, a look at the front pages. What's making news around the world? Your daily roundup of today's headlines from major publications.
Your daily look at the front pages around the world, brought to you by Damian Sassower and Interactive Brokers. IBKR's redesigned Fundamentals Explorer. It provides comprehensive worldwide fundamentals data to clients at no cost. Take your research to the next level. Visit ibkr.com. Fundamentals Explorer, ibkr.com. The newspapers this weekend, Lisa had like 8 choices. What'd you go with, kiddo?
All right, we're starting with space. SpaceX's Falcon rocket, that had kind of blasted off over the weekend. Kennedy Space Center was carrying 4 astronauts headed to the International Space Station. They're going to stay there for 6 months, and they say they're going to oversee the arrival of 2 new rocket ships. So they should reach that orbiting lab tomorrow. But pretty interesting, more from SpaceX, kind of blasting these astronauts out.
And there's just a
Only 6 months, huh?
Yeah,
Only
I mean, compared to the Russians, where they stay up for 6 years, right?
but this is the difference between manned and unmanned. The last unmanned to the moon that landed, 2 weeks ago?
Yes.
Was a sobering
Fell over.
failure.
Tipped.
Yeah, I fell over this weekend too. But the answer is man just is different, isn't it? What do you got next?
All right, Tesla. When you drive cars, do you have a certain loyalty to the brand? That's what this new study is about. So more than half of people who bought a new car in 2023 bought the same brand they had last time. Tesla actually claimed that higher loyal loyalty than any other brand. So people love their Teslas. Now, if you go to automakers, not individual brands, GM got that top spot. They have Buick, Cadillac, Chevy, GMC. So it's all about the loyalty. Like me personally, I'm loyal to Honda.
Of a Tesla? I mean, Elon Musk started this. Everybody's cutting their cost, and I saw some used car depreciation of a Tesla of 40 or 50%.
Tom, my close friend rented a Tesla when we were in Florida. I didn't. I'm afraid to rent any sort of electronic vehicle. That's just me. But he rented one, and it just conked out on him. And in the middle of his vacation, he had to go change his car with the rental company. Like something went wrong there. It was a Tesla, unfortunately. I hate to say that, but I'm still scared of electronic vehicles, I have to say.
Lisa, what do you think? Would you rent an EV?
No, I'm gonna stick. I love Hondas. Like they go hundreds of thousands of miles, and they keep on ticking. That's why I love them.
And they're bringing their old Hondas back to 2018 in for a CarPlay upgrade.
Oh,
so they're
look at that.
On Apple CarPlay, if you have a Honda, up to, I believe it's 2018, you can bring it in like Lisa Mateo. Wait, hers is 1978.
Way back.
Sure.
I tell you, they keep going.
Next.
All right, do you remember Clippy? Okay, Clippy was from Microsoft. It was this little paper clip that would pop up and tell you things that you already knew, like it looks like you're writing a letter. Would you like help? Or, it was all those things, certain things. It was forced into retirement, okay? So
I'll say.
It is experiencing a comeback, okay? So in June, this software developer, he rebooted him as an AI chatbot. Hence AI. There you go. Thousands of people downloaded his app, but the problem is that he put its chatting capabilities on OpenAI's GPT software. Microsoft didn't like that very much. So now it's rebranded. It's called Paperclip instead of Clippy.
Lisa, I love to be interrupted when I'm working. Clippy used to come on every single time I was doing anything. I couldn't get him off my screen.
And if you had an underpowered computer, Damien had, he had the Mac computer with
had so much RAM.
16 megabytes of RAM. Folks, those of you younger, you have no idea how Pleistocene or Mesolcene it was with Clippy. Clippy would literally crash your computer. We got a lot. I do want to say quickly here, we have a huge announcement coming up on what we're going to do forward here on technology and semiconductors. I'll be making that in the next, I got to hold meetings with important people to
That's right.
talk about. You got one more for us or not?
One more. Did you ever notice how much you pay for a cheeseburger? What's the last cheeseburger you order? How much do you pay for it? Was it
afterthought gets them. I just see
$10. They're saying it's going for $16.
Yeah.
Well, if you get them Applewood smoked bacon and the fried egg and the whole smash, which is what I like to do.
Would you go for the big one?
Really, like a loaded burger now at McDonald's is double digits. It's over $10.
Not so much the fast food, but if you go to a restaurant. So the restaurants, where you sit down and you enjoy it, the big, healthy, juicy burgers. They're costing more. Restaurants say they're struggling, so they got to jack up the prices. But they're also starting to do other things, too. They are switching to cheaper shoestring potatoes instead of the thick-cut fries. So you might not get those big, thick-cut fries anymore.
Good morning, Michael's over on 55th Street. Michael's is not switching the fries.
They're keeping the thick-cut.
Have either of you ever been to White Manna in Hackensack? Burgers?
No.
Best burgers. Oh, my God. White Manna, Hackensack, New Jersey. For you Bergen County guys in the know, you got to go. Gotta go.
You're just a font of
I wonder how much those are.
Lisa
how much
Mateo.
are going for?
Thank you so much. The newspaper's here. Subscribe to the Bloomberg Surveillance Podcast on Apple, Spotify, and anywhere else you get your podcasts. Listen live every weekday starting at 7 a.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can watch us live on Bloomberg Television and always on the Bloomberg Terminal. Thanks for listening. I'm Tom Keene, and this is Bloomberg.